Welcome to the discussion of Excel 2018 October question paper. This paper has been tough on average, with questions on financial statements of sole traders, incomplete records, costing, correction of errors, irrecoverable debts, accounting concepts and manufacturing accounts. The grade boundaries of this exam session are quite high, indicating that the paper has been performed well on average. Section A of the paper includes 2 compulsory 55-mark questions. Of them, question 1 is on the topic of financial statements of a sole trader. In attempting this question, first either underline or sketch down the key points of the question. To do this, read through the question completely once. Key points to be gathered when you read through this question include: a grocery retailer, Pence Stores, is going to close its grocery store and open a coffee shop instead. Information to calculate the profit and financial position of the last financial year and, on the change of the business, are provided. As we have gathered the key points, now we got to start answering the question. So, read through the question carefully. Part 1 of Part A asks us to prepare the SOCI for the year ended Sept 2018. So, first draw the SOCI format. Whenever you get a SOCI question, always start going through the additional information. Then, you will not miss any piece of information. Going through them. The first additional information states the closing inventory. In the SOCI, this figure is recorded under cost of sales. Second, the goods that the owner took for his own use, indicates inventory drawings. This should be recorded under cost of sales in SOCI. Third, prepaid rates of 900 indicates rates paid extra, which is not relevant for this year. So, we subtract it from the total rates paid which is found in the trial balance. The answer will be recorded as expenses in the income statement. Next, commission receivable outstanding indicates commission relevant for the year not yet received. Therefore, the outstanding figure of 1,300 should be added to the trial balance figure which indicates only the commission received. This answer should be recorded as an other income in the income statement. Fifth additional information states the depreciation policies. Accordingly, only non-current assets at the end of the year will be depreciated. First, premises depreciation will be 2% of its cost, which is 3,000. Second, equipment is depreciated at 25% reducing balance method. Therefore, first we subtract the cost minus provision for depreciation and then multiply that answer by 25%. This gives us 4,000. Third, fixtures and fittings should be depreciated at 10% of cost, since it is straight line method. Thereby, the answer would be 2,000. Done with the additional information. Now you should enter the balances given before the additional information, into the income statement. In this case, mark out the ones that are entered in the income statement or SOCI. They include all income and expenses which we have not entered before. When working through the additional information, purchases, recorded under cost of sales, wages, which is recorded under expenses. Next is carriage inwards, which is recorded under cost of sales. Next is carriage outwards, which is recorded under expenses. Next is opening inventory, which is recorded under cost of sales. Next is insurance, which is recorded under expenses. Moving on, equipment repairs should be recorded under expenses. Next, general expenses which is recorded under expenses. Now, calculate all the totals and the profit for the year finally, scoring 13 marks totally for the previous question. Part 2 asks us to prepare the SOFP. So, once again, first draw the format of SOFP. Then, go through the additional information, and start entering all information relevant to assets, capital and liabilities. First, closing inventory is recorded as a current asset. Second, inventory drawings should be included in the financed by section. In this case, the inventory drawings should be added to the drawings figure in the trial balance, which indicates the cash drawings. Third, prepaid rates of 900 should be recorded as a current asset, since it indicates an extra payment done. In other words, it is your money with another person in terms of prepaid rates. This should be recorded as other receivables under current assets. Last additional information is on depreciation. In this case, The annual depreciation in the income statement should be added to the provision for depreciation figure in the balances, which gives the answer for the accumulated depreciation column in the SOFP. Done. With the additional information, now move on to the balances given before the additional information and enter all assets, capital and liabilities which have not been entered previously. First, premises cost is recorded under non-current assets. Then, equipment cost is recorded under non-current assets. Then, fixtures and fittings cost is recorded under non-current assets. Then, trade payables is recorded under current liabilities. Then, trade receivables is recorded under current assets. Next, capital is recorded under financed by. Next, bank is recorded under current assets. Now, it is just a matter of totaling up the figures. Starting with non-current assets, carrying value will be the difference between the cost and accumulated depreciation. The total of these carrying values should be obtained next. Similarly, total of current assets should be obtained. In this case, first we have to total the other receivables figure, since we only did a working for that. The addition of current assets and the carry values of non-current assets will be the total assets. Next, to obtain the financed by total, first insert the profit for the year, which is the end result of the income statement in Part 1. Then, add the capital with profit and subtract the drawings to obtain 112,550, which indicates the total of owner's capital. Now obtain the total of current liabilities since non-current liabilities is not present. Finally, obtain the total of capital and liabilities, which should be equivalent to the total assets as per the basic accounting equation. If completed accurately, this will give you 12 marks. Part B of this question asks us to prepare the bank account for the month of October. So, first you should draw a general T account with the title bank. The logic to be followed in entering information into this T account is, figures that increase the bank balance should be debited and that decrease should be credited. This is because bank is an asset account. Having understood the logic to be followed, let us now start entering the figures. Always ledger accounts should be started with the opening balance or balance BF. This figure should be searched for by reading through the question from the beginning. So, as stated in the balances, this figure is 5,900. The date will be the beginning of the month. Going through the question. The next piece of information on bank is the premises alterations cost, which is paid in half during October. Since there is no specific date given for the transaction, we should take the end of the month. The figure will be half of 20,000. Next, the check received from disposal of equipment should be debited. Once again, date isn't given, so the end of month should be applied. Then, fixtures and fittings figure of 900, which has been received due to disposal, should be debited in the bank account. The date will be the end of the month again. Next, fixtures and fittings purchase price should be credited in the bank account, again with the end of the month date. Then, the grocery inventory sale value, which will be the cost of the inventory, will be debited since the business is selling it and earning money from it. Next, payment to trade payables should be recorded in the credit side. Check received from trade receivables should be debited. Next, redundancy pay should be credited. Similarly, the running costs should be recorded. Similarly, the running costs should be recorded. Similarly, the running costs should be recorded. Now, as usual, start with the additional information. In this case, make sure you consider only the figures of the new coffee shop that is proposed to be opened. This includes all information after A. Going through them, premises alterations is ignored since it is a capital expenditure. Rewinding back, only revenue expenses are recorded in the SOCI. In the case of equipment sold, the profit or loss on disposal should be recorded in the SOCI. So, the profit or loss on disposal will be the difference between the disposal price and the net book value of the asset. The net book value of the equipment can be found in the Part 2, which is 12,000, and it is sold for 7,800. This means there is a loss of 4,200 because the equipment which is actually worth 12,000 is sold for 7,800. Similarly, the profit or loss on disposal of fixtures and fittings should be calculated. Since only half of fixtures and fittings are sold, we should compare 800 with half of the net book value of fixtures and fittings, in the SOFP in Part 2 of A. Going through the rest of the information, New fixtures purchased is not recorded in SOCI since it is a capital expenditure. Grocery inventory sale is not related to the coffee shop, so we should not consider it in the SOCI. Payment on trade payables is not an expense or income, so we do not consider it in the SOCI. The case of trade receivables is similar to redundancy costs should be recorded under expenses since it is related to the coffee shop. Running costs should also be recorded under expenses since it is related to coffee shop. The bank overdraft isn't an income or expense, so we don't take it to the SOCI. Moving on to the rest of the information given, after Part B question, information on revenue and other costs are given. Now, we need to enter them. First, revenue will 1,500 multiplied by 47 multiplied by 5 because 1,500 customers will use the coffee shop for 47 weeks, each person spending 5 per week. Second, they state that the gross profit margin will be 80%. This indicates that the gross profit is 80% of the sales figure, which is 80% of 352,500. Third, information states that total running costs exclude depreciation, loss on sale of non-current assets and redundancy costs. Therefore, the 90,000 figure we have entered in the forecast SOCI does not include depreciation, loss on sale of non-current assets and redundancy costs. Therefore, we should record them separately in the forecast SOCI under expenses. First, in considering the depreciation, we should make use of the old depreciation policy, with the new non-current asset figures. When calculating the new non-current asset figure, the old balance, which is the balance of non-current assets in the SOFP, should be added to the no current assets purchased during the year. Thereafter, the disposed assets cost should be subtracted. After identifying the new non-current asset figures, we should apply the old depreciation policy. So, completing depreciation, the loss on sale of non-current assets have to be considered. This has already been considered before. Redundancy costs, which is the next piece of information, has also been entered before. Fourth, information does not have to be recorded in the SOCI, since it is a capital expenditure. Only revenue expenditure is recorded in the SOCI. After going through all of these additional information, we have completed the information in the forecast SOCI. Now it is just a matter of getting the totals in the SOCI. Completing Part C, Part D asks us to evaluate the decision of the owner to change the nature of the business from a grocery retailer to a coffee shop. Whenever you get a theory question, first read and identify what it asks us. Evaluate means we have to talk about the good and bad of something. What is this something? This is their decision to change from grocery retailer to coffee shop. When answering this question, you have to discuss at least 3 points for and 3 against with a reasoning point for each. A strong conclusion is also required. In this case, make sure your conclusion is based on a discussion of points including both financial and non-financial. Here is a sample answer that can give you full marks in this question. As calculated in Part C, the coffee shop will earn 171,350 of profit, in comparison to the profit of 9,300 earned by the grocery store. This indicates that the change considered is good in financial terms. In support to this, the gross profit margin of the coffee shop is expected to be at 80%, which is very higher than that of the grocery store, which is only 32%. This is good for the business. It is even better when you consider the fact that the profit of the grocery store has been steadily falling in recent years. This means if the grocery continues, the gross profit margin next year will be even lesser than 32%. Furthermore, as forecasted by Pence, coffee shop will have less operating expenses in comparison to the grocery store. This is better because the net profit margin also will be better due to this. Thereby, the business can easily gather funds for further expansion too. However, this forecast is only an estimate. Thereby, it is not 100% accurate. Hence, there is a risk of over-relying on the forecast figures for the coffee shop. Also, if the grocery store is closed, certain employees will lose their jobs. This could reduce the job security of other employees, leading to demotivation of them. Further, making them redundant is a social cost. This can bring a bad reputation among the community. Further, Diversifying into a new business is risky to parents since they are going to enter an industry in which they have not had any experience before. Therefore, they might have to face new problems now in unexpected times. However, in this new type of business, they may be able to cater certain niches or get closer to the customers than a standard grocery retailer. Compare Starbucks and a coffee retailer for an example. In conclusion, the coffee shop should be opened replacing the grocery store since it has both financial and non-financial benefits. Yet, we should consider its negative aspects and take necessary steps for them. In this, the yellow highlights are the key points. Green ones are the cause or effect points. Blue ones are examples. With that, we have come to the end of the discussion of question 1st of October 2018 IAL accounting exam. Stay tuned for the discussion of question 2 of this paper, in the next video, which is based on the lesson of incomplete records. Do feel free to request for any personalized videos of any questions you find hard, by commenting below. If any of you do not have access to this paper, you can find it in the link given in the description below. So, work hard and excel well at your exams. Do not forget to subscribe and also share these free resources with your colleagues and contribute towards their success. Have a wonderful time.